about this. There is reporting that inside the White House there is an effort to actually lower effectively capital gains, which is perhaps surprising given what's going on. When I say lower capital gains, tying it to inflation, which would, I understand the philosophical argument about tying capital gains to inflation, but it would have the effect of lowering capital gains rates, which would, of course, there have the effect of increasing what's left in the wallet. Effectively, 85% of the benefit, if not more, would go to the top, the wealthiest people in the country at a time right now where there's this conversation going on about inequality. Does that make sense?
Makes a great deal of sense. It is going to happen. Schumer of New York, Senator Schumer, said it was wrong to tax inflation when you tax capital gains. This can be done by a definitional change by Treasury or the IRS, or OMB, actually. And this is all made possible by a Supreme Court decision in 2002 called Verizon v. FCC, where the Supreme Court, the pre-conservative Supreme Court, said, yes, of course that you can do this.
So, and it will cost. Let me Grover, real quick. Before we go, it'll cost the country at least $100 billion over 10 years. That's the cost. So when you talk about the debt that we have already on the books being too much, and when you look at CapEx spending in this country, given all the tax cuts, you would think we'd be doing better. No.
Two things. What you want is effective investment, and the $100 billion number is completely static modeling. What you're missing, and what some folks have not paid attention to, is people who bought land or a house or stocks 20, 30, 40 years ago often don't sell those even when it makes sense. Corporations have maybe $7 trillion in sticky capital they're not moving around, because to sell it you get hit with the tax on inflation. End that tax on inflation and you'd see trillions of dollars of previously held assets move to higher and better use. It's not new investment, but it's investment in better use.
All right, so let me respond to this. So first of all, I would strongly disagree with Grover's assessment that this is going to happen because it's legal. That's much, much fuzzier than he presented. And in fact, I've heard nonpartisan folks who've looked at this said that this is not something you could do by executive order or rule change. You need Congress, and Congress won't do it. We're talking about indexing capital gains, so you cut their tax. But secondly, here's the thing. There is a long track record of nonpartisan, no thumb on the scale, research on the impact of capital gains tax cuts on investment, and the correlation is zero. I couldn't disagree more with this assertion that you tweak the capital gains cut and you get a bump in investment. And by the way, once again, it wasn't capital gains, but it was other high-end incomes. The Trump tax cut is Exhibit A. So yeah, it's going to cost the Treasury $100 to $200 billion, and I don't know what you're talking about in terms of some supply side score there. You're just not going to get that from any reputable model. And secondly, you're going to further exacerbate this inequality problem, what we've been talking about. I just looked at some numbers over the weekend. 31% of net worth, according to Federal Reserve statistics, quite recent, fourth quarter of 2018, 31% of net worth held by the top 1%. 1% of net worth held by the bottom 50%. I know I sound a little bit like Bernie throwing out those numbers. But, I am Bernstein, so perhaps there's a connection there.
I feel the Bernstein.
Yeah, and just all you're going to do is exacerbate wealth inequality, rob the Treasury of much-needed revenues with no investment bump, and it's probably illegal anyway.
Here's the good news for you. The Supreme Court says you're wrong, and this is going to move forward. Well, they get to decide, frankly, so you've already lost this debate.
No, we haven't. That's nonsense, Grover. You know that's wrong. You're going to shout me down, or you're going to let me talk? You talk for a long time. No, in fact, I would. I'd like to come back here with you, and you'll either prove me wrong or I'll prove you wrong. It's an open question.
When we reduced the tax on inflation, it is morally wrong for the government to create inflation and then tax people on it. On a bipartisan basis, in '81, Reagan and the Democrats indexed capital gains for ordinary income. Schumer was on the floor of the Senate. We tweet out regularly his wonderful statement that we should eliminate the tax on inflation and capital gains. This has bipartisan support.
So I'm somewhat sympathetic to that. Can I make another offer to you?
I'm sympathetic to the philosophical view of this. I think that the math makes it hard.
I think the math makes it hard, but I'm somewhat sympathetic. But let me see if we can if Grover and I might be able to agree on something having to do with the math here. Suppose we were to implement what we're talking about here, but make it revenue neutral by increasing the rate. That might be something where you could get some folks around the table talking about it. I'd be skeptical to even begin to go there.
I don't think that Grover wants to raise the rate. I'll speak for him.
No, we're not going to raise the rate. We don't have to, luckily. We will end the taxation of inflation on capital gains. It's wrong to tax inflation. We recently had an interesting debate in New Zealand everyone should look at. It's one of the few countries with no capital gains tax at all. The left-wing government wanted to impose one. It was defeated entirely on a debate that this would be a tax on inflation. In the left-wing government... support that.
We got to end. It's too confusing. Jared loves the Koch brothers and Grover loves Schumer. We got to end this
somehow rich people. The conclusion of all these debates is that somehow rich people need more money and poor people need less money.
God, stop with the class. Can we just enjoy a good economy for a while, Jared? Relax. Will you on that class stuff?
I like that unemployment rate.
It would have been better than the last 8 years would have been better. But, you know, things are finally turning around. Be happy. Thank you, Norquist, Grover, Super Grover. Jared, feeling the Bernstein. We'll see you again, and you asked to be back together. You know, who are we to say that's not going to happen?